Hey, so I want to look at Airbnb, ticker symbols ABNB. Last time we looked at them, and let me share the tracker with you. So we have Airbnb. Last time we looked at them was about a month ago, June 3rd. They were trading at that point at 118. We had buy points marked at 95 and 105. We'll pick a more firm buy point. We'll make it bold so we're more aware of, just the more likely buy point. We also noted resistance at 131. And we also noticed that for the past 4 months, it seems like it's been consolidating between 105 and 131. That's already hinting at me that 105 is probably the more likely buy point. But we'll see if that's still the case, if it's been consolidating for about another month. Before we do that, though, I do have some news about Airbnb between the last time we looked at them, June 3rd, and today. So let's go into that, and then we'll finish up with the technical analysis, see how just things have changed over the past month. So right off the bat, on June 9th, a finance ministry official said that the plans were being worked on and it was not yet clear whether they would be included in the 2024 budget, which is likely to be published at the end of September. And so what this was referring to is France apparently felt like there was some tax loophole that Airbnb, I don't think it was Airbnb specifically, but I think it was the residents who were using their apartments or their houses as an Airbnb. I guess there was some sort of loophole in the taxes. France felt they needed to fix something. And so uh, they put something in the budget, I guess. I'm not 100% sure of how that works, but it's clearly going to impact Airbnb in terms of France. And when you think of France, you think of Paris, so a very big city. So to continue with this, nearly 20% of people in the greater Paris region that do not already rent their home or part of it on Airbnb plan to do so during the next year's Olympic Games in the French capital. So nearly 20% that don't do it are planning on doing it in the next year. So whatever this loophole was or is, hopefully something gets worked out here. Airbnb helps boost the income of thousands of French families, and 60% say the extra income helps them afford rising living costs. So it's a positive in that way. We want to work, so this is Airbnb talking, we want to work with French government on measures to make their lives easier, not harder, while working together to tackle the root causes of housing challenges. So this was Airbnb saying it, who also happens to be one of the sponsors of the Olympic Games. So be interested to see what their ad looks like, or it'll just be interesting to see their ad campaign for there. Next, we came across this article that said 3 reasons to buy. I whittled it down to really just one reason here. It looks like the company posted its first ever year of positive annual earnings in 2022, and it's on pace to boost margin this year. Airbnb is now consistently turning over more than 40% of sales into free cash flow on an annual basis. That figure hit a record $3.8 billion in quarter one after quarterly free cash flow jumped 87%. So I'll be interested to see their next quarter's financial statements. It'll be just a nice change of pace to get into that. Investors are being asked to pay a high premium for that growth potential, with shares valued at 9 times annual sales right now. This valuation might easily shrink if travel demand falls due to an economic growth slowdown. That's definitely a case, but I'm focusing on the 9 times annual sales. Airbnb is very different. They're another one of these smaller companies. And when I say small, I mean like I think they're like 20 to 30 billion dollars, which is small relatively speaking. So to trade at 9 times annual sales, um, I I just think their revenue growth potential will allow the sales to grow, and it's probably it's probably a decent price right now, and that's why the premium seems to be okay. But let's keep going. Uh, so this was interesting. New York City basically had like a lawsuit on Airbnb, or like they were going to. Let's just go into it. So the city of New York will delay enforcing a municipal law that Airbnb Inc. said could limit the number of people who can host rentals in the city. Short-term rental company so Airbnb filed a lawsuit against the city on June 1st over the law it called a de facto ban against short-term rentals set to go into effect on July. Under the law, hosts must be permanent occupants of the units being rented and must register with the mayor's office before posting rentals. Office will not issue fines against hosts or booking services until September. So they pushed it back, uh, but not by much. So this will be very interesting because clearly it's going to impact Airbnb, and you'll see the impact as we continue along. So both parties agreed to a temporary stay of enforcement to afford them the opportunity to fully debrief the issues before the court. The law would make it harder for hosts to do business by requiring that they comply with numerous zoning regulations, dwelling laws, and housing maintenance and construction codes. Airbnb here says, we hope the city will use the extra time to collaborate with us on a sensible alternative solution that will benefit hosts, tourism, and local economy. So very positive things here. It seems like Airbnb really does want to work things out here, and especially with this city. Airbnb said that in the first week of July, more than 5,500 short-term rentals are reserved to host more than 10,000 guests in New York City. That's just in the first week. Shares of the company rose 5.7%. Okay, so that's all I wanted to share on this. So very interesting. We'll see how this plays out over the next couple months. So a little more about this though. Airbnb in New York. So this is the figures I was talking about, and I kind of mentioned this. So 5,500 plus short-term rentals reserved to host, 10,000 plus guests in that first week of July, 20,000 New York apartments and homes are listed on Airbnb, and this is the one. Okay, so $85 million is the size of Airbnb's New York City market, and I believe that's annually. New York City's contribution to the company's $8.4 billion annual revenue is 1%. So New York City makes up 1% of their revenue. That's a chunk. I mean, it doesn't seem like it, but 1%, that would be, I guess they wouldn't lose it all, but obviously if this happens with New York City, the downfall could be very dangerous, I guess, if other cities start to do this, and you lose 1% here, 2%, it could add up. And then apparently one thing, and I don't think Airbnb personally would pay for this, but if so there's this $5,000 civil penalty per violation for those who skirt the New York City local law 18, which we kind of covered in the previous article. So that would just make people not like Airbnb, I guess. But as long as they follow the rules, I truly think it's not like they would lose that full 1%, that 85 million. It's just a lot more rules would make it more difficult to enter it, as opposed to just signing up on an app. But let's keep going here. Okay, so there were some other crackdowns. In Malaysia, an island of Penang banned Airbnb-style accommodations in a bid to curb the antisocial tourist behavior. Okay. In the Italian tourist hub Florence, they banned vacation rentals like Airbnb in the city's historic center at the start of June. Okay, so just, I imagine like a district, so nothing major there. Hosts in Paris can only rent their space out for a maximum of 120 days in the year. I guess that's manageable. I feel like Airbnb's main revenue source is those short-term rentals, which are clearly less than 120 days. It's just the person renting, they basically could just do a season and a half, something like that. and then they'd be tapped. So it's like, what is the best 120 days to allow renting to get the most money in Paris? Would it be like the summer months? If everyone crowds the summer months, and then you can't stay there in the winter, that's tricky. I'm sure it works out to some degree, but that one's a tricky one. Okay, so here's this new thing, this ADUs. So this stands for accessory dwelling units. This is something that happens or is happening in California. So accessory dwelling units, they've soared as homeowners try to extract extra value from their property. But it's not just that. They are also providing cities and states another way to add housing inventory amid a supply crunch. AirBNB co-founder Joe Gebbia sees so much potential growth in ADUs that he started a new company called Samara to help with this process. The article continues by saying, we've also seen governments get behind this because ADUs to governments are providing horizontal density throughout the cities and neighborhoods. And so governments have changed laws to make it even easier for people to get ADUs. In fact, they're basically making it a right to have an ADU in your backyard. Again, this is just California. California is doing this. And it wraps up by saying California is ahead of the curve here. There's been at least 8 other states that have passed laws similar to California's, Texas included, is evaluating some ADUs at the moment. Governments realize this is a fairly simple way to add more horizontal density. So I guess some cities are having problems where, they want to build a big, sky riser, I believe is the right term, and like rent it out like an apartment complex. And that really, that'll jump the amount of housing they have in that area versus this approach, which is they add these ADUs. So instead of having this huge building that probably the city would pay for, instead the homeowner can build something themselves, and that also adds living space in this city that they're trying to add to. So it's an interesting workaround, and it sounds like it can be profitable. But moving on, we have, so some numbers here. AirBNB is expected to post earnings of 80 cents per share for the current quarter, which is year-over-year change of about 40 to 43%. I believe they're posting their earnings at the end of July. So again, we'll be able to see, we'll compare here. The consensus earnings estimate $3.51 for the fiscal year, which would be about 26% growth. For the next fiscal year, the consensus earnings is estimating $4.10, which would be, I guess, 16 to 17% more than that 351 if it plays out that way. The consensus sales estimates of $2.41 billion for the current quarter. That would be about a 14 to 15% year-over-year growth, and $9.5 billion in this year. So we'll see if that plays out. And then they're also forecasting $10.73 billion in the year after, so 2024. And both of those years are about 13% growth. So it's respectable. It's not that 25 figure that I always am shooting for, but double digits for a company like this, if you buy at the right points, I feel like this could be better than nothing. It's decent return to get in the double digits. And then the last on this one is their reported revenues of $1.82 billion in the last reported quarter, which represented 20% year over year. So that's not the best quarter. So hopefully the summer quarter, picks it up a little bit, because 1.8 towards a 9.5 billion year, that's kind of low. But let's keep going. This was a positive. It shows AirBNB listening to customer feedback. So there was this issue where we would be looking up Airbnb rental on the app, and it would show, oh, you can stay at this place for $50. And then all of a sudden, when it's time to pay, it was $100. And they're like, well, why is that? Well, apparently people were hiding the cleaning costs, and so now it's more upfront. And then the second piece was apparently a lot of Airbnbs were giving you like a chore list to do, and they're still allowed to do that. It's just some of the, at least one of them was like to wash the bed sheets. Uh, I guess that was crossing the line. That shouldn't be done. Throwing trash away, yeah, that's a chore that's reasonable. But to clean and wash the bed sheets, that was, they're like drawing a line at that point. And so they made the chore list a little more reasonable. So two good things for the customer there. And this is the last article. Apparently, someone did some digging and saw numbers that showed that certain cities, major cities, were going really far down. I think like Austin was one, San Francisco, uh, just a couple of the major cities. Someone said that they were going down like 50%. And this article shows that they Airbnb and I guess someone else, they don't see where those numbers were coming from, and so it says this data is not consistent with our own. We said during our first quarter earnings, more guests are traveling on Airbnb than ever before, with nights and experience booked growing 19% in the first quarter of 2023 compared to a year ago. I think I saw at one point that that might have been where the 50% was coming from, where if you pulled like 2 or 3 years ago when travel was like super high, it was down in comparison to that. But on a year over year, it's not that steep. Um, but let's just continue with this. Airbnb said the number of nights and experience booked in the current period will look unfavorable compared to a year ago. So we'll need to be prepared for that. Also, as a result, the company expects year-over-year growth in nights and experiences booked to increase at a slower pace in the second quarter than revenue. So they're already kind of prepping me personally that this second quarter's results are not going to be the best. Um, but we'll see. Overall, I think they have a lot of growth opportunity. Uh, but yeah, let's move into the technicals. So again, last time we looked at this was June 3rd. So let's just zoom in here. June 3rd was somewhere in here, probably. We saw it at 118. So we'll zoom in a little more. 118 is like, it's right here actually. Oh, okay. Yeah, that makes sense. Okay. So June 3rd was a Saturday. And so it's 118 right here. Ever since then, it's really just gone right up. So that would have been, well, we gave it a fair value. So it was right in the middle, we felt. So clearly it was just on the way up. Yeah, so right off the bat, I'm seeing it's near this red line. This red line is 131. That was the resistance point that we noted. So we're right there. We're literally at the resistance point. So we're at a pivot point this week where, and right now it's already testing it very similarly than to the last time, which happened in February. I mean, it poked its head up above 131. So really, I mean, if I wanted to, I could pull this up a little bit to like there, and that's probably the exact number. Still 131, just different pennies. But okay, so it's right there. It's right there at 131. The crazy thing is the whole first year of this company, because this company is very new, it became public in December of 2020. And so for the first, up until April, end of April of 22, so for like a year and a half roughly, 131 was the support point. It came to that point two times. I could argue three times. It started off around that level, pulled back to 131, and then did it two more times in first half of 21, it looks like. Or like the mid 2021 is better. and then all of a sudden it crashed through that point in May of 22, has not gotten above it since. And so the reason why I say we're at like this crossing or this intersection here, because one of two things is going to happen. Right now, I'm on the side that it's going to get rejected. Nothing's telling me that it should go above that. And yeah, I guess it's just the more conservative point is that I'm on the side that it's going to, and I can just draw this in, I think it's going to do something like this. Chances are I'm hoping we can circle back to this one around here. I'll stretch it out a little bit just for some buffer. And I'll make this yellow just so it pops a little more, or just so we know what's going on. Actually, we'll make it purple because purple's like our first indicator. And so yeah, that's my guess, is that it's going to pull back maybe in like the 115 range, something like that. If it were to pull back to 105, even better. I'd be okay with that. I guess the reason I have it slanted in this fashion is it kind of matches here. But, it could pull back very quickly. I mean, again, if we zoom in, I mean, it can make moves of $10, $15 in a week. So, a couple of those, we might be back at 105. 105 would be the time that I'm going to buy. So I'm going to keep that point in there. I'm going to make it bold. Yeah, let's just start updating this a little bit. So currently it's at 131. Right off the bat, I'm going to label it as red, meaning I'm staying away from this one because it's right at that resistance point. If I were to buy this one, yeah, 105, it seems like that's kind of the point. It'd probably be safe to maybe put it at 108. 108 is probably a little bit better. I'll pull it up just a little bit. We'll say 107. At 107, that catches these a little better. It's kind of in the middle here. Catches these points. 105. I'll just go in the middle. So 106. I moved it up just a little bit. 95. Yeah, there was some support here, so I'd be okay with that. I don't think it'll pull back that far anytime soon, but if it does, that'd be the next point that I'd be looking for. If it were to go, say, below 100, I probably wouldn't buy at 100, but we'd see. Resistance 131, I'm fine with that. And then we can add today's date. The note that we had was consolidating between 105 and 131, which it's been doing that really since January. I'm going to call it February. Since, we'll say January 2023. So it's been doing that for over 6 months now, hanging out in that range. So that's definitely positive to the fact that we could probably catch this one in maybe the 110, 116 range. And I'd be okay with that. If we could catch this one below around like 111, 112, I'd probably give this one the green. 106 is the number though. But again, I'm flexible. And so on the contrary, what could happen here, I'm going to draw in a couple more points that I feel could be interesting. So right around here, I feel like there's some resistance. So I'm going to put a red line in here. We'll make this one half strength because we're just not there yet. So it's not as important. I I'm gonna put in a green point, or I guess we'll call it blue for now. Whoops, what? I did not mean to do that. Okay. Okay, so now let's add in another point. I'm gonna put it right around here. This is, I'm gonna make it green, just because once it kind of got over here originally, that was kind of the line at 147. So I guess what could happen here, I'm looking for other potential like resistance points. Nothing's really that strong in terms of resistance. Yeah, so on the alternative, I would say if Airbnb, like, I don't know, does really well, something good happens in the news, what could happen is this one could rally all the way up to 175. Uh, that is kind of on the table. And so, me being more conservative, I think what's more likely to happen is we're going to continue to see this 6 month trend play out. It's going to get rejected at or near 131. That's right where it is today. And I think we'll see it kind of drag down, maybe to, I don't know, in the 110 range, 115, 119, somewhere there. But that pretty much, that wraps this up. So, whoops, what did I do here? Yeah, so just a quick summary here. So Airbnb currently is at 131, which is at a resistance point here. It's the only one we have right now. So our buy points are 95 and 106. 106 is more likely, and I'd be willing to add there. We also noted that it is consolidating between 105 and 131. It's been doing that for the past 6 months. 105 is probably a stretch in all honesty, but to catch this one in like the mid 112, 113, somewhere in there, that's definitely, I can see that happening. But it's been in that range for the past 6 months, dating back to January. So we'll continue to watch this one, see how it plays out, especially with that New York situation. But yeah, if you have any questions or want to add any insights that you came across and want to share that maybe I missed, feel free to leave something in the comments. I'd be happy to read that. But that's it. Please like, subscribe, and I'll see you on the next one. Bye.